The theme of my talk tonight, tongue-in-cheek, is rich country, poor country. And I'm talking about what has been happening on a serious note to South Africa. And there are a lot of Brent's clients here tonight. They know my talk, they know my speech. And what we've been advising our clients and the general public out there for quite some time is essentially a story of a country going backwards in terms of its economic growth, its economic potential. On the slide behind me, you can see the GDP per capita of the world and South Africa over the last 25, 27 years. And you'll see that from 94 onwards, we kind of kept pace with the world. Our wealth per capita did increase. But now around about 2010, 2011, something has happened, and it continues to happen. As a whole, our country has been getting progressively poorer and poorer, as you can see, and it's one of the few countries in the world, and much as I love my country, much as I'm loyal to this country, these are the facts that we have to deal with as investors, however unpleasant they might be. Looking at South Africa's GDP, putting it differently, just a single chart, South Africa, as you can see, our GDP per capita, when the rand was still relatively strong, our economy growing. Our GDP in total was around about $116 billion, and that has declined very, very substantially over the last 8 to 9 years. This chart shows the 40 OECD countries right now, 2 weeks old, and our economic growth at the moment is the lowest of the 40 countries that make up the OECD countries. So it's again an indictment of what is happening to our economy. It's been coming for a long time, and I sometimes feel that our media tends to underplays what is happening, looking more at short-term ups and downs in the markets, instead of standing back and saying what is happening with the big picture. The big picture is we all have become progressively poorer as a country, as a nation, as individuals, unless we have done certain things in our investment strategies. 10 years ago, foreign investment into South Africa was 22% of GDP. In other words, the foreigners, they were putting money into South Africa at a very, very high rate. And they were happy with what they saw, the returns were good, and something happened, partly caused by the decline in the commodity cycle, which we know does impact South Africa. But as a result of that, and the outflow of money, and if you analyze these figures a bit more technically, after December 2015, now we all know what happened in 2015 when Nene was fired overnight and there was an attempt to take over of Treasury and Finance. Foreign money absolutely just flowed out of the country, and it still remains that way. So a country that suffers these downgrades, that suffers this outflow of money, that suffers the decline in GDP per capita, pays a price somewhere. The price is you and I and everyone have become poorer in international terms. Let me show you one of the consequences is, of course, a weaker rand. A rand, 2011, can you believe, R6.50. Today it's 15. It's an astonishing decline for a currency. We pay the price in the price of higher prices for imported goods. So the rand is one of the symptoms of the unfolding crisis that I'm referring to. The second one is, if one looks at, and it's a very busy chart, but clients of Brent's know this one very well. If you look at that, what I've done there, I've compared the returns of the Johannesburg Stock Exchange in rands against a couple of global funds that you can invest in. And very simply, and it doesn't matter which way you look at it, rands, dollars, the South African returns in the stone last over 3 months, 6 months, 1 year, 3 years, 5 years, 7 years. If you convert this return into dollars just as a matter of interest, the returns on the Johannesburg Stock Exchange over the last 5 years for a dollar investor has been zero. Not 1 cent return over 5 years. So you made no money. in the South African Stock Exchange, and not many people realize this. Let's look at the average returns, as I said to you, 1 month, 6 months, 1 year, 3 years, 5 years. The South African Stock Exchange is showing, is symptomatic of the economic picture that I sketched for you. So your investments on the stock market, collective investments, if it is not exposed to offshore markets, have gone backwards and you've been saving yourself poor. The second one is, very briefly, something that concerns me greatly, and I write about it quite a lot. Our pension funds. Andrew referred to exchange controls and the impact of that on your pension fund is just as severe. Your pension fund returns over the last 3 to 4 years, in fact this is 5 years, has not beaten the inflation rate. For the simple reason, exchange control says your pension funds may not invest more than 25 or 30% of your money offshore, and that's not enough to beat the inflation rate. That's just a tabular, again, over 1 year, 3 years, 5 years. Your pension fund, your retirement annuity, your preservation fund, you can check it, ladies and gentlemen, especially the old types of investment instruments, are giving you 3%, inflation is 5 or 6, you are going backwards. Your property prices in South Africa over the last, 12 years, 10 years now, has not grown 1 cent in real terms, in rand terms. Your average house price today in real terms is about 15% lower than at the peak of the market in 2010, 29. I did a number the other day. I went and I took the average price of a house in South Africa 10 years ago, and I compared that to the average price of a house in America at the then exchange rate, and I used the Case-Shiller index, and I got to the average rate of, you could buy with an average South African house 10 years ago about 80% of the average American house at that time, which wasn't a bad number. I did the number the other day, about a month ago. The number is now down to 28%. You can only buy 28% of the average house in America with the price of an average house in South Africa converted to dollars. So the net result, you're getting poor. Simple as that. So property as an asset class, for a variety of reasons, under severe pressure, and continues to non-form. So that, ladies and gentlemen, is the macro background as to why you should consider. I'm not going to tell you what you should do. I'm giving you the facts. You're smart people, you must make up your own minds what you should do with these facts. You can ignore the facts and hope that things will come right. Hopefully they come right. But there are certain structural issues that you cannot ignore in South Africa, and that compels you to consider other places for your money. Now, when it comes to property, the options for South Africans moving offshore as a result of the currency the last 10 years has narrowed fairly significantly. What appeals to me for Mauritius, and I'm not being paid to say this, I've had a love affair with Mauritius for 30 years. I've been going there for many, many years. Had a couple of nice honeymoons there. Eventually I moved out of when we could buy property in Mauritius, I took the chance. And I'll just give you a classic example, and I'm not saying it's going to happen again, but 5 or 6 years ago, my wife and I, we decided to buy in Mauritius. But at the same time, we also put some money down foolishly on another rental property when buy to rent or buy to let was at the peak. And approximately the same price we paid for a property in Mauritius on the west coast, development called West Island Resort. We paid approximately 4.5 million rand for both properties. That's 6 years ago. The price converted back to rands, and luck does count, but there has been dollar growth, there's been rand growth, so on a good day, probably could sell that property for 15 million, 16 million rand. So I count it as one of my better investments for a long time. The house in Dainfern that we bought, spent a lot of money on fixing, getting tenants in and out there who don't pay. Probably on a good day, it's about 5.5, maybe 6 million rand. It's just been an absolute no-brainer. So I've been in Mauritius for a very long time. I've seen the property market grow. Especially the new entry level appeals to me because of the uptick in prices, the decline in the rand. To get something close to the sea will cost you $1.5 million, maybe $2 million, which practically is simply too high for most South Africans. So a place like Montresor, very close to the airport, multi-use, which appeals to me, all these things make it a very attractive proposition. Think very carefully about the scenario that I've sketched. I don't know what's going to happen in the future, but it does make a lot of sense to have a bit of your money in another country earning potentially dollars or rupees or something like that. Thank you very much. Bye, Donkey.